Hey, what's going on, everyone? Welcome back to another video. In today's video, we're going to talk about one of the hardest parts when it comes to being a DIY investor, whether you're in PII or whatever type of investment style you do. It's really how to structure and change your holdings when you feel like your portfolio needs to be adjusted. So today, I'm going to walk you through my own mindset and sort of some basic surface level research that I've done to prepare for portfolio adjustment in the near future. And if it sounds like I'm trying to convince myself in this video, it pretty much is because I am. I have one holding that I've been thinking of selling for quite a while now, and I think I'm going to make a swap in the next week or two. So go ahead, guys, hit the like button. And as always, nothing in this video is financial advice. So the holding I'm talking about here, guys, is USCL. This is one of my largest holdings, and just recently it did have a dividend cut. It went from 24 cents to 23 and a half. So you can see here, basically since 2025, they were paying, it went from 23 cents to 26 to 24 to 26 and back down to 24, went up to 25, and now it's down to 23 and a half. So one of the reasons that I want to sell off USCL is just because when I compare it to something like HYLD, which you can see here is my fourth best performing ETF at 19.26%. It's just not, it just isn't performing as well. The distributions are just a little bit too choppy for me, and they're based around very similar asset classes. I'm going to walk you guys through some of my own research that I've done that's kind of basically convinced me that I'm ready to make a change out of USCL. Now, USCL here, it's not my worst performing investment. I'm not saying it is a terrible ETF or investment. You can see it down here at 12.44%. So I've received quite a bit of income from them, over 16,000 in dividend income. You can see here, it's got a yield of over 12%. So I've owned it for about a year now, maybe maybe a little bit more than that, and my total return is about 12.4%. But you can see, in contrast to HYLD up here at 19%, it is trailing behind even C-Day, which I haven't even owned C-Day as long, is doing quite a bit better. Now, of course, some of these things are based around different assets. We're going to jump into all that right now. So what I want to take a look at first is SMAX from Hamilton ETFs, because I know that a lot of people say that USCL versus HYLD is unfair because the currency hedging and stuff like that. So this is SMAX. The yield is a little bit less than USCL. The yield is 11.26%. But if we look at HYLD, SMAX is 61% of their holding. This is HYLD here, this page. So this is HYLD, and you can see that SMAX is 61%. Okay, and then also when we take a look at SMAX and we scroll down, you can see their holdings here. But basically, guys, they are unhedged. Their currency is unhedged, as you can see. Currency CAD unhedged. Okay, so that is going to be a little similar to USCL because USCL is unhedged. So if we're just looking at the currency, the performance shouldn't be too much different. So went over to the Old Fish website. Shout out to Old Fish. If you guys haven't checked out his YouTube channel, go ahead and check it out. He's got this great website with this calculator. So basically, I run this calculation, put a bunch of different ETFs, USCL, VFV, HYLD, SMAX, and HYLD.U. If we're looking at currency, we've got HYLD.U. Basically, guys, you can see that USCL is the very bottom here, 23%. It's over 3 years, and we'll just go back 1 year and take a look at that. And USCL, 12.8, HYLD is at 20, SMAX is at 18.3. So there's a lot of theories as to why USCL is kind of lagging behind the pack. When it comes to a bunch of these other ones here, you can see HYLD final gain 30, almost 37% versus USCL 28%, and then SMAX 32%. So SMAX is still ahead, and then HYLD.U, if you're looking at the US currency, almost 40%. So there's a lot of theories why USCL is lagging and stuff like that. There's this good video from Dividend Empire. Where is it? Here it is. Check out his webpage. It's called Why I Sold USCL for HYLD. He does a deep dive into it and kind of looks at the currency hedging, but also the management and like the options trading strategies and stuff like that. So I did watch that video a couple months ago, and it did kind of get my mind going on some reasons why it might be a good idea to do the swap. Um, and then another thing is we'll take a look at the top 10 holdings. So this is USSX. So this is what is inside of USCL. Guys, if you see the top 10 holdings here, it's basically the Magnificent Seven. It's basically all technology plus Berkshire Hathaway, right? So of course you do get S&P 500. You have hundreds more stocks in here, but like the percentages are just dwindling below 1%, right, on a lot of them, because even their lowest in the top 10 is 1.5 with Berkshire Hathaway. So you're basically, like most of us are with our portfolios, very, very tech heavy when it comes to some of these diversified, or quote unquote diversified funds, right? So here it is, straight off the Global X website. This is their holdings. This is USSX, right? So this is what USCL and USCC hold. So basically, to get an idea of what they're holding, it's mostly like the Magnificent Seven, and then it starts to the weightings start to drop as it goes down. So that's basically an overview, guys. And then when you look at HYLD to me is just like a very innovative strategy that they've done here. So one other thing I want to point out before I get into this is HYLD is rated as a medium risk rating on their website, whereas USCL, I did notice a little while ago they did bump it up from medium to medium high. So it's gone slightly. The risk rating has gone slightly higher. Okay, something just to notice. Now, HYLD, they just have a very innovative strategy. They've got all these in-house funds that they can dial up and dial down depending on how the market's going. You have, their day maximizers to kind of boost that yield. You just get a little bit of everything, but basically you are getting the same, broad-based holdings, right? But they're just going to be, I think, weighted a little bit differently, maybe a little bit more actively managed when it comes to the weightings and the strategies and stuff like that, especially on these day max ones like the Q day and the S day. And then also like Hamilton ETFs. I don't know if you guys know this, but I watched an interview that Adriano at Passive Income Investing did, and they talked about they keep a 1% or 1 or 2% cash buffer to make sure that they can pay their investors. Like, I don't know, that to me, that's a pretty big thing. Like they just seem very on top of their investment strategies. They seem very innovative. They're always bringing out new funds. They're doing webinars. I went to one of their webinars a couple weeks ago about their Daymax, like their Daymax lineups and how it works and stuff like that. And so the other thing with HYLD is, so the risk rating is slightly, lower. So okay, that's maybe not the biggest deal, but their net assets are also much much bigger, 1.1 billion versus USCL 244 million. Now, again, I'm not trying to knock USCL here. It's hard for me to want to try to walk away from this fund because I've been invested in it for so long. It was one of my biggest investments, and maybe that's part of the reason why I am looking to maybe not completely sell off of it, but just to maybe just hedge myself against it just by selling some shares while the price is basically what I paid. So even though the price has come back up with all the distributions I've gotten, I am in the green on this investment. So when we look at USCL, basically it's my biggest position, you guys, and partially my own fault for basically plugging in $100,000 into it all in one go. Um, so the thing is, for me personally, is when the dividend gets dropped a little bit, even just a little bit, it does affect my monthly income quite a bit. So that is part of the reason that over the last few months they have had those dividend fluctuations. But my cost per share is 23.26 on USCL, and it's currently trading at 23.14. So regardless if I sold it today or if the price came up or down a little bit, I am still technically in the green because it's in a non-registered account. I could sell it. I could sell it anyways and realize a loss and be totally okay. So I'm gonna go through my plan when it comes to USCL here, you guys. I've kind of made a little plan. So here it is. So my first option, call this option one, sell $33,000 worth. It's 1482 shares at the current price. So I would lose about $348 a month, but I would buy HDIV with the 33. That would bring me up to 73, or I would buy HYLD with those 33, and that would bring me to 344. So I'd be with HYLD roughly the same. The next option would be to put 11 into HDIV and 12 into QDay. So I'd be total of 284 with that. That would bring me $64 per month down from where I was. The next option would be to sell 66,000 USCL. That would cost me $700 a month in dividend income. But I would take 33,000 by HDIV, 20 into QDay, and 10 into CDay. And so that would bring my monthly income to 743. So I would gain $43 per month in dividends. My last final option here is sell $83,000 worth. That would leave me with a $50,000 USCL holding. I would give up $838 a month in dividends. What I would do with that 83 is I would put 41 and a half into HDIV. I would put 20 into CDay. I would put about 22 into QDay. That would boost my dividends up to $992, which would give me a $150 per month dividend increase from where I currently am. That's basically my three options, you guys, and my mindset around it is basically this. As I said before, when you're looking at some of these different ETFs, there is a few things to consider. So let's say I did sell off, half and put it into HDIV. Well, with HDIV, what do we know about HDIV? We do have very good performance as in price performance. We also have those steady dividend increases. So it's just a little bit of a smaller yield for now, but in the long run, those dividend increases will bring my yield up. Also, well diversified through the Hamilton in-house ETFs. Now, the other things, a couple of the other funds is, let's take a look at QDay. Well, QDay is the Hamilton Daymax Technology Daymax ETF. But when we look at the holdings, guys, very, very similar to the top 10, which are already inside of USSX, which means they are inside of USCL. This is actually just a little bit more diversified, but it's all still tech, right? So I would go QDay, HDIV, and then CDay as well, just to kind of round it out. CDay is going to be having some overlap in stocks with HDIV, but they are those Canadian blue chip stocks. And then the nice thing that we all know about the Daymax series basically is that they are holding 100% in the CMVP, and then you get the 22% leverage for your options. So you could potentially see a lot more upside, right? So that's kind of my plan, you guys. It's not the easiest thing for me to want to get out of USCL. And again, I just think the timing might be right for it. I don't think it's a terrible investment. I think if you're looking for pure index play, set it and forget it. Maybe this is something to consider, but I really do feel, especially if you go over and watch that video here from Dividend Empire, where he does this in-depth comparison. I really think it comes down to the option strategy that they are using here. And we can see here their last. So their last options, they covered 45% of the portfolio, 1.9% out of the money. They're getting about a 10.8% yield and a 1.42% dividend yield. So it's nice that they put it out there, but Hamilton's strategy is different. I just feel like it's a little bit more like hands-on and innovative and stuff like that, especially when you have SMAX where the holdings are just a little bit more broad based, and then you kind of stack them with their other in-house yield maximizers. Again, yes, there's some currency hedging and stuff like that that goes on, but I think we've basically covered that through the analysis that we did with Old Fish. So, anyways, you guys, that's kind of my thoughts. If I can sell a good portion of USCL and put it into a blend of HDIV, C-Day, and Q-Day, which, by the way, C-Day is rated as medium risk. I believe that Q-Day is rated as high risk. Let's take a look. Yes, high risk on Q-Day. And then HDIV, I want to say, is rated as a medium as well. So yeah, so it's risk rating medium. So basically, guys, I feel like your overall risk is going to be it's going to be about the same, if not maybe slightly lowered from USCL, because going from medium high down to two mediums and one high, and then kind of spreading it around between that technology index, those blue chip Canadian stocks, and then HDIV, and still coming out with actually a little bit of a higher monthly income from this all as well. Those are my thoughts on USCL, you guys. One of my biggest positions, one of my biggest holdings. Not an easy thing to do when you're a DIY investor, to try to do some research. You're looking for yield, performance, also diversification, though. And then again, guys, there's sort of three components. There's the fund manager, the strategy, and then the stocks, right? So, kind of trying to find the good blend of all of those. I just feel like I still think USCL is a great addition to my portfolio. I just think I have a little bit too much. It's just a little bit too heavy on this one position right now for how things have been going. So I think that that's my plan to sort of cut down a little bit on the USCL. Let me know, guys. Let me know your thoughts. Should I go with option one, option two? So I've basically got a couple options: sell 33,000 worth to bring my total down to 100, sell 66,000 worth, and that sort of almost brings me down half, or sell 83 worth. I would see a decent increase in income and then be left with 50,000 in USCL. Anyways, guys, I hope you enjoyed this video. This is just some of the thoughts that go into researching and doing the analysis for different investments in your DIY portfolio. Leave me a like, leave me a comment, and I will catch you guys in the next video.